I think we'll all have to reassure ourselves that this is the real people sitting in a real panel for a real discussion. So this is not metaverse yet here. Well, I'm back again here now as the moderator of the first panel that we will be having as the discussion today. We have 3 panels as we spoke earlier. So I would quickly invite my panelists, so first let me introduce them and then we'll invite them on here. My first panelist for the day is someone who everyone in the room knows. He's actually the head of retail and digital banking at National Bank of Oman. Someone who actually comes with a lot of experience and particularly understanding on what's happening in the market. Please put your hand together to welcome Tariq. Thank you, Tariq. My second panelist for the day, someone whom I've known personally for more than 20 years, someone who actually has been there, done it, not once but many times, and someone whom I would like to call as a transformation specialist, someone who's actually flown down all the way from Dubai to be with us today. And I would be it's my honor to actually have Bhanu with us, Bhanu Narendrakumar, who is the head of transformation for core platforms, Emirates NBD. Bhanu. My third panelist today, we actually have someone who has, interestingly, 2 hats. A hat which is actually to do with managing risk, both market and operational risk. And another hat which is actually to be driving strategy. And this is Salman Kabani of Bank Nizwa. Salman. My fourth panelist today is someone who actually, in the true sense, a globetrotter, someone who banks around the world, look forward to listening not about what he is doing in his factory, but what his views are about what's likely to change and what's changing. In fact, someone whom I look up to many times to actually have a perspective on many things that's happening around the world. Please put your hands together to welcome Maiya. Maiya is a VP and Global Head of Business Consulting, Infosys Finacle. Thank you, everyone. So just to set the context of the panel today, this is obviously, as you know, a topic which we discovered or discussed earlier. It's about innovation, and it's actually about NextGen Banking, which is the theme for today's discussion. We will obviously be having this conversation with the panelists, but towards the end, we will be having an opportunity for the audience to be interacting with the panelists as well. So thank you again, lady and gentlemen, pleasure to be here. So without much ado, why don't I start with you, Tariq? Look, let's first, there are 2 parts of this discussion. There's NextGen Banking and there is innovation, right? So maybe we should decode this NextGen Banking first. So if I can ask you, what does that phrase NextGen Banking really mean to you? Yeah.
First of all, thank you very much, Ram, for inviting me here. It's an honor to be here. And secondly, thank you, Chetan. You have not left much for us to speak about after your presentation. So if you have paid enough attention to Chetan's presentation, basically the whole day is covered by him. I think one thing that came out very clearly from what he presented is that banks would need to do and we need to take measures to stay relevant for the future customers. And what does that lead to? Does that lead to offering their banking services through digital means? Does it mean to have the relevant products, the right attitude, the right services, and to be able to complement to the new market? So if fintechs, we saw in Oman, I think around 9 fintechs are already licensed and are operating or about to operate in Oman. How can the banking industry actually complement them should we profile them as partners or as customers, but find a value to see how can we work with them and be able to offer banking services to all the new customers or opportunities that they may lie for us. So I think it's all about staying relevant for me.
Staying relevant for the next gen customers. So that's an interesting perspective, right? For customers who may not even exist today, but who are expected to come into the foray tomorrow, yeah? Well, I mean, that's a very interesting perspective, Tariq, and actually I am going to take that cue and take the question to you, Bhanu. So customers keep changing every decade, right? I mean, then I guess the transformation journeys also change every decade. You obviously seen, you are driving transformation today at, one of the largest banks in the GCC, and you've also been at the helm of doing the same thing, in different contexts in the past, right? How do you see the difference between what was, let's say, transformation journeys, let's say 10 years back, to what we do today?
Good morning, everyone. Thank you, Ram. It's a good question. Very brave, very smart. Brave because he chose the youngest in the panel. Smart because he stopped with 10. So going back to the question, Ram and Chetan were iteratively emphasizing on people, process, and technology, right? So I'll start with innovation as a process. Innovation as a process, transformation as a process existed 10 years ago. But today, when you speak of innovation, it's a functional unit in every bank. Yeah, it's not, we have 100 people and we have few who can also innovate. Everyone in the organization is expected to innovate. Everyone in the organization is expected to bring new partnerships into the organization. So that's how we have transformed innovation itself from 10 years ago or even beyond to what it is today. And innovation those days used to be across all dimensions, right? People used to innovate around products, innovate around services, customer experience. Whatever you call it, there was innovation. But if you see in the recent past, the innovation has kind of converged into service-centric innovations, correct? What was CASA is CASA today. Nothing has changed, yeah? But if you look at it, how do you offer CASA? How easy do you make that CASA available for anyone not sitting here in this room or not people whom you see, but even beyond that? So that's where innovation has progressed over the years. So if you ask me, technologies like Open API have been great tools in breeding this kind of innovation. So having transformed innovation itself, now I'll move on to how has technology organizations reacted to this change. Sitting 10 years ago when we used to develop strategies, we used to layer platforms. We used to say, core systems belong to record layer. Then you have omni-channels which belong to engagement layer. Then you have channels all belonging to the innovation layer. So there was a very clear demarcation on platforms, how they were segmented. But today, if you look at it, we speak of open architecture. The boundaries are thinning, right? And we used to theme around strategies called SMAC: social, mobility, analytics, and cloud. They were all incubating 10 years ago. But today you cannot think of banking without social, without mobility. Analytics, you'll be surprised to see our risk and compliance partners contribute to the major use cases of analytics today. And they are the guys who are actually aiding in most of the innovations. When you used to do innovation, you used to fear these risk and compliance guys, but that's diminished over the years, right? So technology platforms over the decade have transformed into the way of thinking. And open APIs, like again, I go back, we run hundreds of marathons over the last few years, either internally inside the bank or outside. Open APIs give lots of opportunity for people to think around and innovate. So if you look at it, building a strong architecture, making it agile is what has over the years helped innovation to grow itself. Now, speaking of people, of course, people are not the last elements. We used to speak about banking technology those days. If you have to be in IT, you have to be a banking technology person. Because those were the days you used to be solution providers. But now, you are business themselves. You slowly moved from solution provider to service provider. Now, if you speak of agile structures, you're part of business. And many of the organizations catch you for the bottom line in whatever that you develop and deliver. So that's how technology has merged with business. Speaking of which, of course, the core layers, we have become very platform agnostic. But banking technology has now become engineering organization, which means everyone in technology needs to be, except for a very selective population who manage the core and the treasury areas, everyone has to be an engineer. He has to be platform agnostic. So I would say banking IT organizations are more and more becoming engineering organizations. Vendors are becoming partners. We don't refer to them as vendors anymore. I have many key vendors who have been partners in the transformation journey. I mean, so to speak, this 1 billion dirham transformation that ENBD invested on, Cedar was our governance partner. And the Finacle, of course, we got married to Finacle many, many years ago, so Infosys became our partners in innovation. And coming to quality, Explio is our very strong partner when we deliver it. So we have many of the key partners in this room, and strong partnerships have transformed vendors into being referred to as your own organization. So that's also a change in the mindset that's happened over the last 10 years. Whenever you give me a mic, I will not let the mic go without quoting my CEO's very old statement. Yeah? He said, Emirates NBD will be a bank today, but one day it will be a technology organization that will also do banking. Okay? So that was a coined statement. It's not new. It's been there pre-COVID. It goes back beyond 6 or 7 years ago. So that's what has transformed many banks, set a vision. So technology is in center of every business a bank does. So that's how I see it today.
Brilliant. Thank you, Bhanu. I mean, this was so fascinating to hear you speak, right? I mean, we chose this title for the summit as NextGen Banking and Technology, and you just explained why that was so accurate in the way we call it out. Thank you, Bhanu. I think there were two important messages that came out beyond the fact that IT functions are more about engineering now, and it's platform agnostic, and bankers will eventually be technologists who also do banking. I mean, besides that, I think you made a very interesting statement about how the offering is no longer about a product offering, it's actually a service that is being rendered, and you took the CASA example and how it is actually being delivered to the customer, right? But that actually is, from a banker's perspective, and I'm going to go to my next panelist, Salman, and I'm going to take a customer's perspective here, right? So when we do all of this, and when we talk about next gen, and we talk about the next gen customer that Tariq talked about, in your view and from the perspective that you see, is this about experience or is this about convenience?
Good morning, everyone. Thanks, Ram, Chetan, for inviting me here. I think it's from customer standpoint, it's more about experience. Convenience is one bit of the experience, and when we say experience, then the experience includes the reliability, the efficiency, the accuracy that customer expects when he uses a banking services. Like my colleagues mentioned, banking has transformed a long way, and actually it is late, and that's so because of 2008 financial crisis, and we also risk managers are responsible for delaying this initiatives. So me wearing a double hat, perhaps that is a vision that the management, the board has, is that we pursue a direction of digital, embracing technology, advanced technologies. And also to the same time we deliver a value to our stakeholders, deliver value to our customers, to our shareholders. So the benefit that technology offers, we leverage them. Now from the customer standpoint, what customer today needs, banking is more than a banking. Why? What drives that need and demand by the customer is basically the evolution that today all the industry are because of the technology, and banking is one of them. But the experience is where the customer is attached to. Customers are today not attached to or not loyal to a bank, they are loyal to the experience. So if the customer continuously getting that experience, that institution will remain relevant. If we don't offer that experience, we are no more. We are not relevant for the customers. And it's a matter of survival for the banking institution to embrace that technology, to offer that experience to the client. When I, as an individual, I see what are my needs. So I'm a risk person. I understand investment very well. So I want that when I want to research about one company I want to invest in, I should have access to all the information on my tips. I don't want to talk to my RM or advise, and I don't do. I prefer to do my own research because I'm the one taking the risk, I'm the one taking the decision. So advisor has a vested interest that I feel so. So I'll take a call when I want to enter, when I want to exit. I may lose, I may gain, but at the end it's my own decision. I will not blame my bank. So my bank has nothing to do, they have experience that I benefit from. So saying so, like in the corporate side, when we talk about an experience, then the corporate expectation is that when I start my business, I want to see that end of the day, how much cash I collected, how I can leverage this and get a return out of it, what is my receivables, what are my payables. I don't want to invest more in the technology because my partner has already invested in. So we go with back the same thing that what my partners offer. I don't care it's Emirates NBD, if it is a Bank Nizwa or big banks. I want a service that my institution offers. So that way what the experience is makes a difference. So banking will remain a banking. What will change is the way we deliver banking services. So it is not a bank responsibilities. Any player that comes to the market today, a big techs, half of the big techs are already into a remittance, into a payments business, right? So are we irrelevant in the industry? No, people remain trust bank and will continue to do so as long as you are offering that experience, a convenience, a reliability with secure way to the transaction. Same time, my objectives should be achieved when I see that I'm getting a benefit from that transaction that I do, the funds that I have in my accounts, I get return out of it, I do a profitable business, and when I want to do, at the end customer is that technology is changing, he's getting disturbed by the healthcare, the prop tech, reg tech, anything you name it, ed tech, everywhere you see a financial thing is involved. So we as a strategist, we ensure that wherever the financials are involved, banks should be there. So that's what my take on it is.
Very nice, Salman. So convenience is one element of experience. You said convenience, reliability, and security are three critical aspects of an experience. And my takeaway from what you just said is customers are loyal to the experience, not to the institution. I think those are powerful words here. I'm actually going to have a very different question for you here, Maiya. We talk about next-gen banking, and Tariq talked about, having next-gen customers being central to what we call as next-gen banking. You actually, you've been dealing with banks around the world, and you engage with different markets, different customer segments that are being delivered by those banks. Is next-gen banking ubiquitous? Does it have the same meaning in every part of the world, or is it different? And what, in your view, would actually, your observations from a Middle East context as against, let's say, what we see around the world?
Thanks, Ram. Thanks, Cedar, for inviting me here to be part of this extreme insightful conversation that we're looking at. So from our own perspective, look at Infosys Finacle. It's been used by more than 200 banks in across 100 countries. So that collective experience, what we are seeing is in terms of banking as a content is not changed over the last 400 years. But the container which carries this content has been changing over the last 400 years. Let me explain you in a simple terms. If you look at in terms of way back when people wanted to communicate, they were using, I'm talking about the Stone Age, they used to use these stones to carve out something, and then that was the communication, and many of the Stone Age sculptures are still available for us to read. when the industrial revolution took place, that communication started resulting in printing materials or printed materials. And when the internet came into picture, a lot of them started converting into a media in terms of electronic. But the content, in terms of the intent of communication, has not changed over a period of time. But the containers which are carrying, like a stone or a printed media or an electronic media, that has been changing over a period of time. The same thing applies to banking. Banking as a content has not changed in the last 400 years. What used to be a service provided over the bench by Italian noblemen way back in 1940 or so, 14, 1500 kind of a time, that has not changed. But from there, it has converted into joint stock companies and banking companies. Now you talk about the startup, the fintech, the big techs. Only the containers are changing. So from a next-gen perspective, the banking still remains. Banking is not changing. But the containers, the provider services keep on changing. We don't even know whether it is going to be big techs or tomorrow somebody else may come and provide those services. If you now look at in terms of the exact definition of what a next-gen will look like, it has to be doing more with the less. Many people think that if a transformation has to happen, if a digital transformation has to take place, you need more resources, more people, more technology. But that is not true. Basically, this is the age of doing more with the less. Actually, less is more. So why you say that? If you now look at in terms of a next-gen service provider in a banking parlance, I'm not talking about the banks. Any provider who's capable of doing it. It can be telco or an insurance company, or it can be a retailer as well. So they're all going to be called next-gen if you are looking at stateless in your architecture, faceless in your interaction, paperless in your documentation, contactless in your communication, and processless in your orchestration. And if you now look at purposeless in your infrastructure, and similarly, if you now look at trustless in security. So it's all less they're talking about is going to make a perfect next-gen bank. And you may ask me, what is that purposeless we have talked about? Okay, we agree about the faceless, the contacts, the cashless, or in terms of the architecture. The purposeless is whenever you build something around a financial service, the infrastructure has to be such that you should not create it with an intent. If you create that with an intent and an objective, that's going to constrain the usage of that. I have a classic example of that where it is happening in India now. India has one of the most sophisticated open banking environment in the world. Any country which has to capture that kind of a phase, it will take minimum 5 years. And the whole infrastructure was built as a purposeless. It was not built keeping in mind that we need to use this for something specific. The moment you do that, it is going to be restricting that and become outdated over a period of time. The entire India stack that has been built by the market infrastructure perspective is a purposeless. If you now look at Aadhaar, 1.3 billion people having the identity. It is not built with a purpose. It was built with basically providing an identity, but today it is now transformed itself in terms of using it for opening a bank account within 60 seconds. That means customer validation, account creation, transaction, everything happening within 60 seconds. And that is in terms of faceless, contactless, paperless, and you don't have to go visit a branch. Similarly, documentation-less. So if you now look at that is being used by the banks, it is being used by the insurance companies, it is being used by the primary healthcare center. The whole vaccination of 2 billion vaccination that was issued in the last 2 years, it has been all based on this Aadhaar as a validating platform. That is purposeless. Similarly, Chetan talked about in terms of the UPI. Today we process more than 7.5 billion transactions per month. It's expected to grow 50% CAGR in the next 5 years. So the 7.5 billion transaction, which is running on a UPI, it is again a purposeless infrastructure. That means what has been built from any wallet to any wallet, any mobile to any mobile, any bank to any bank, any currency to any currency. So that is the kind of the infrastructure that we're looking at. So next gen is going to be like this, which is purposeless, stateless, in terms of contactless, faceless, cashless, documentationless, and trustless kind of an environment. I'll pause here.
Well, we need to talk less, I guess. Well, this was doing more with less. I think Raj has given some new dimensions to this. Yeah, I started taking notes, but I stopped taking. I lost count of the number of categories, and I don't know how many. But I quite like the way you articulated the whole purposeless definition. So doing stuff which, you know, when you're creating infrastructure and it still actually has more purposes than what you would have thought of. But I'm still, wanting to hear from you on how do you compare Middle East as compared to the rest of the world?
So if you now look at in terms of each country has, of course, Middle East you cannot consider it as one single segment, fragmented in terms of own experience. Each country has different levels of maturity when it comes to in terms of managing the expectations of the end customers. If you now look at Dubai, it has built quite a few advanced capabilities in terms of technology utilization, the maturity of the banks in terms of trying to leverage what's happening globally. And Bhanu mentioned about the transformation that has taken place, and simple thing like leveraging the blockchain as a technology to remove the hops and as well as in terms of intermediaries and carry out the transaction within 36 seconds from India to Middle East. This is kind of a thinking of way back in 2014, 2015. I'm talking about 6-7 years ago. That is a kind of change that is required. And same kind of an approach, risk-taking ability is missing out in many other countries that we see in the Middle East. So of course, everybody is trying to be getting ahead of the curve, but we see there's a lot more can be done. Considering there are countries are small, population is small, and you should be able to cover them in a much faster time frame when it comes to in terms of implementation and leveraging the technology. But we are seeing lack of experimentation that is putting the people in terms of the behind the curve.
Thank you, Maiya. We talked so much, Tariq, about NextGen Banking, and there was a comment that Bhanu made about innovation. But I'm actually going to be asking you something about innovation, right? How does one actually make innovation as a culture in an enterprise, right? And I think more importantly, how does one get to define what could be the innovation agenda? You've seen the definition of innovation also evolve over a period of time. So your take on that?
I mean, we've all heard this term that culture eats strategy for breakfast. So it's extremely important that if we are driving an agenda which is offering banking services digitally, then you need to have the buy-in of your staff internally, and it needs to be important and perceived as valuable by your customers. I mean, there are so many products and services that we actually launch and after putting so much of effort into it, but not all of them are very successful. The reason is that probably either your own people were not seeing it to be as important, nor were the customers seeing value in it. So I think having the value, the perceived value, and then getting the right amount of appreciation. So from a staff perspective, if it's something that is being appreciated by the management, then obviously they will all feel obliged towards achieving that achievement. And from a customer's perspective, because the customer statement actually drives everything. Banking industry is, in most of the part of the world, is actually adopting. When ATMs were launched, probably many bankers felt that, it is not needed, and it was not a great success. Probably the first bank which installed ATMs did not leverage and had a growth of so many times. It is when the whole industry adopted it, and it was appreciated by the customers, that, this particular innovation, which was probably once upon a time known as NextGen, was
That's
success.
right.
So, mobile banking. I think I remember that some few years ago when we were trying to launch mobile banking, it was a challenge to actually convince the management of the bank that we should be offering banking through mobiles. Because there was a fight back that, are you in your right senses? Do you want to give people the ability to transfer money and, play around and whatnot? And the risk was in all places and everything. But today, but this practice is now adopted. It is available in all the banks. And today, it has become sort of a basic expectation of any customer that we need to have that. Can I operate a bank today without mobile banking? The answer is definitely no. Can I operate a bank without ATMs? No. So, these are how they are adopted, and then these adaptations then, transform into a culture, and it's taken from there.
Interesting. And tomorrow, I guess, we will not even need mobiles, and you'll have avatars actually doing it for you on the metaverse. Yeah. So.
Yeah.
No, thank you. I think it's all about culture and actually getting the buy-in. And as you said, it's about ensuring that you carry people along through the execution and make sure the customers eventually get to see the value. You know what? But an idea is always as good as its execution, right? I mean, we can have a great idea, Bhanu, and I'm taking this question to you, right? As Tariq explained, not every initiative is successful and things fall on the side for various reasons, right? But, your idea will actually be, you may actually have a challenge on the idea itself if it is not executed well. And the challenge may not be about the idea, it's about the execution. And keeping that discipline of executing it on time, to deliver the value is, let's say, the most important aspect of making sure you see the value there. How does one go about, or rather, what typically goes wrong that one should be wary of and protect oneself from?
Okay. Innovation is nice when you speak of people throwing ideas on the table, like you rightly said, and winning awards for it. It's good, but putting it to production on time, it's not easy, and it's a solid question. A lot of content. I think when you innovate, when you want to deliver, defining the MVP is a big challenge all the banks face. Yeah, you put an innovation on the table. Everybody wants to have a stake in it, right? It's not just putting it out in the market, be it either on the web or on the mobile, or even let it be even a branch innovation. Doing that, you're thinking of first, of course, delivering the innovation itself through a solution. Then you want to see, how will I auto-reconcile this when it goes into production? So somebody wants that in the MVP. Okay, when you do this, are you screening these 100 things? Okay, that's also in the MVP. By the time you do it, somebody in India has already done it and gone. He's put 100 people at the back door doing all this for you. And innovation is dead. I mean, I innovated it, but then you say, oh, somehow it leaked, somebody implemented it. When you can think of something, there are 100 other people in the market who can think of the same thing, but in different flavors, yeah? So defining the MVP is not a delivery responsibility. Defining the MVP is bank's responsibility. That's what more and more we have learned over the years. Agile organizations are helping with. Speaking of agility is not only in speaking of squads and ceremonies and sprints. Agility in platform is a key factor. You have to have platforms that are truly agile. You can't think I can deliver an innovation agile by keeping monolithic applications in your ecosystem and fooling yourself that you'll be able to deliver it fast, which will not sustain. You may deliver it in 4 sprints, but it will not sustain in production. So what do banks do? They invest a lot on the middle layer, yeah? Which is where Chetan spoke about a lot in detail, and Maiya also was leading up to it. Open APIs are the future. Open APIs have existed, but how have many of the banks taken an adoption to it? How have they exploited it? Are they willing to exploit it? Is something that's going to really help, because an innovation can go into a market fast if you leverage the already available tools in the market. Yeah. So that's keeping an architecture, platform architecture agile is a key thing. Third thing, today whatever innovation it is, as an end user, you want to have an omni-channel experience. You started it in mobile, that transaction failed. Tomorrow you go into the branch, you want to be recognized for something that you did 1 week ago on your mobile. So you have to think of omni-channel view when you're, may not be in MVP, but you have to have a vision of how do you make it an omni-channel experience eventually if you want that innovation to truly sustain. One more thing I would like to add here is, over the years, risk and compliance, their technology have evolved a lot. They're not the same old, it's not the same. The policies would have emerged. Maybe if you were screening 10 lists, today maybe you have added 5 more lists to it, but that's not about it. You have risk and compliance technology has evolved so much, and you have to exploit it in your innovation. And when you're delivering something, keep risk and compliance as partners in your crime. Don't go to them at the end. Yeah? They will do everything to stop you. That's because it's risk and compliance. I am, end of the day, I drive the bank. I need to know it first. You could have innovated it, but when you deliver it, you better keep me in the party. So that's one learning we have taken over the years. Last but not the least, I think strong partnerships are key elements. We innovate a lot with our partners. Infosys has been with us in many innovation journeys, not only in transformation journeys, in many innovation journeys. So I think strong partnership, valuing those partnerships, because you operate in your own country, but they travel along the globe. So they bring ideas. So exploit that partnership strength in innovation, because most often what the partner brings is a more practical innovation than what you dream of. So I think strong partnership is a key. In fact, one thing I'd like to say, which I missed in my... Ram was speaking about his association with Oman in 2005. I go way back when ANZ Grindlays existed as a bank in Oman. That's many, many, many years ago. That's when the first credit bureau of the entire GCC was successfully functioning. Oman was the first country. So you should be proud of it, guys. It's just that, yeah, please, I would like to do it. And I wasn't surprised when Chetan was reflecting that many of the payment vision is coming out of this place, and it percolates down to the surrounding radius. So things like that, So there is something. It's not legacy. You can still innovate on legacy. So that's something that we have also learned over the years. So I think I'll also pass for now.
No, I like this, Bhanu. I think don't reinvent the wheel. Leverage what exists, be it APIs, be it partners. Make sure that you are not starting from scratch if you want to deliver on time. And I like the way you built on what Tariq said earlier. Tariq said, carry people along. And Bhanu made it specific, carry the risk people along. I like that, yeah. But if I was to then, go to Salman, I guess, say, look, there was a comment that Bhanu made, right, about an idea is not the choice of the executing team. It's actually a bank's idea. And I think that's where, I guess, a lot of challenge really is, right? The essence of strategy, as they say, you head the strategy function. The essence of strategy, as they say, is being able to choose what not to do, right? And it's always a very difficult prioritization process, right? What do you choose? Everything seems to be important and everything seems to be critical. And you have to prioritize, right? Because your resources are finite, right? What would your take on that be?
So I share my secret, actually, what Bank Nizwa follows. So innovation is something that we, Bank Nizwa, as Islamic bank, we encounter daily. When I say daily, it is not on tech side, in our daily business. We have to compete with conventional partners, conventional peers. We have to address our corporate clients, and the corporate clients' needs are like they don't understand much of the Sharia concept, but our responsibility is to communicate what our responsibility on the Sharia side both parties has. And at the same time, we have to ensure that the client gets what he could get from a conventional peers. So we always put our brain and our heart in the process. And heart because it is what our values is. So innovation is something that we have been experiencing and we have been practicing for quite some time. The Bank Nizwa history is we are the startup bank. And it's been like, now we are celebrating 10 years of operations. So still we feel like we are still evolving in the process. Because what we envisage or what we envision 2 years back, today if we look back and we see we are late. We did not achieve that, or I don't think what we assume and what we were expecting that we did not get that target. That's fine. So our management, our board, and the understanding is the management is a very young management, so which is good. They understand technology very well. So it's not only the risk person I am understanding a strategy. The head of audit is more tech savvy than anybody else in the Mancom. So you can understand what kind of a management we have and the thinking what we have. The CEO, like I would say the same thing that Bhanu mentioned. Our CEO vision is, he calls that Bank Nizwa is a IT company selling Sharia compliant banking products. That's what his vision is.
At the end of today's discussion, I guess we'll all have IT people in this room. Yeah.
Exactly.
No bankers left, yeah.
So, the point is that we don't have a fear in failing, but we want to fail fast. We want to recognize mistake and move on. There's no point to drag on, fail fast. That's the one thing. Second that we see in the strategy, if you're not losing anything, you should do it, because we don't know what the future is. If we are not sure about anything that we want to do or we have an opportunity, we go ahead. We say, like the common statement, if you are not losing anything, we have nothing to lose. What's the worst case scenario? Like a risk thinking, nothing to lose, go ahead. Or we are not sure, go small step, take a small step and then move on. Get an experience, but don't say no, because if we don't do it, my competitor will do it. And we understand very well that we want to focus on our core competencies. I'll repeat again, and more emphasis is less, is that we need partners. We need partnerships and trusted partners. We follow a clear strategy, a very clear direction is the open banking. We see open banking is the next-gen banking. So that we focus on our product, and what is our core competency is a Sharia compliant product. So we want to stay relevant as we are Sharia compliant. So we focus on our product, on our portfolio management, but the sales and the execution of it is through our partners. Idea is a 1% of the entire innovation. 99% I would say is execution. And time is essence, cost is essence, resources are limited. So we don't want to utilize our resources, which are expensive for us, because the capital that we have is very expensive. So, and the return on capital is important for us. The return will only come when we invest and we move on first, get our revenue and return to the shareholder.
So leverage partners and fail fast if you have to fail. Right?
Yeah.
So the idea here is to actually maximize the value of the partnership, which is going back to what Bhanu said. I think we'll open up for questions from the audience, and before they do that, one question for you here, Maiya. In fact, two parts to this question, right? One is innovation. As they say, yesterday's innovation is today's passe, and innovation keeps changing. I mean, we talked about ATMs were innovation at some point of time, as Tariq was explaining, and we're talking about a cashless economy where ATMs may become redundant tomorrow. So we are dealing with change as we see today, right? If you have to pick one most defining innovation as we see in the banking industry today, what would that defining, most impactful innovation area be?
Thanks, Ram. If you now look at, this is the age of disruptors getting disrupted. So what previously known as the new age entrants, whether it's in the retail or manufacturing or high tech, for example, people thought about Amazon as the disruptor, the Uber as the disruptor, the food delivery folks are disruptors. They are all getting disrupted now. So this is the age of disrupting the disruptors. If you now look at in terms of the challenge in front of all this innovation is how do you sustain it? So the sustenance of the innovation over a longer period of time, and the period definition varies from industry to industry. In the banking parlance, if you're able to sustain it anywhere between 5 to 10 years, that is what we call it as in terms of the good innovation, worthwhile investing, and taking it to the market. So if you ask me in terms of, has there any instances, generally, and I'll come back to the banking, generally like that, any innovation sustaining over a period of time and generating value over a period of time? Yes, obviously. Where I come from, India, if you now look at, we started this journey of the entire IT outsourcing 25 years ago. So what started as few companies starting it as and providing value articulation in terms of a cost arbitrage. Today we export almost $195 to $200 billion of IT exports out of the country, which is much more than what Saudi exports from an oil perspective. We employ almost more than 5.1 million IT employees in that sector, out of which 2.5 million work for the US companies. So if you now look at the top 10 most valued global IT companies, top 5 are Indian. The top 5 most revenue companies, top 3 are Indians. If you have now 5.1 million I spoke about, out of that 2.5 million work for the companies in the America, out of the 6 million people who work for the IT services in the US, 1 million are Indians. And out of the 9 million people who work out of the total companies in US, 3.5 million are Indians. So you have this kind of an ecosystem that keeps on evolving over a period of time. What used to have in terms of limited to big companies, today is spread across the country. Today we have 80,000 startups, the third most startup country in the world, out of which we have 102 unicorns. So if you now look at 2020 and 2021 are disrupting years from the best perspective business, we have had it almost on every 29 days, a unicorn. Unicorn is a company which is valued more than $1 billion. Almost every 29 days on an average, we have added one unicorn in 2020. But in the 2021, average 9 days, we added one unicorn. So that is the kind of growth that we have seen. That is the kind of sustenance of the innovation that makes the ecosystem keep on going and making sure that you disrupt the disruptors. If there is Infosys, let's now bring out some other company to disrupt it. So that is the kind of thing that needs to happen in the banking industry. So coming back to your original question in terms of can I identify one big innovation that has been sustained over a period of time, I can talk about DBS, bank globally, which is the most awarded digital bank globally, either Euromoney, McKinsey, or Silent, and things like that. So this is the safest bank from Asia. And if you now look at their aspiration is not to compete with the next door bank. Their aspiration to become a tech company. So they want to be the D in the Gandalf. What is the Gandalf? It is the Google, the Amazon, the Netflix, and they want to be the D. The DBS want to be the D in the Gandalf. Then you have Alibaba, LinkedIn, and Facebook. So that is the aim that they have. They claim that they have 32,000 innovators in the company. And that is the first bank which is going to start the hackathon. They provide 72 hours, water and food, and call hundreds of engineers, make hackathon, give them the idea. That idea can be even looking at in terms of how banks can help sustain the entire climate culture. So that is the kind of investment they are doing. And for the last 5 years, they have sustained this leadership. And they are going to sustain this because of the culture that they have built. And that is going to be the example for many banks to follow globally in terms of what a culture of innovation that should be practiced in banks.
Thank you. Yeah. I have to make a confession. This session today is not to actually evangelize bankers to become technologists, although every single panelist here seems to be doing a bit of converting people into technologists here. Yeah. Questions from audience. I know we have, there's one hand going up there, please.
My name is Bhanu Tangirala from Explio. Fantastic discussions, Ram. I mean, the entire panelists. So enlightening, I mean, in innovation. But I have a few questions for Tariq and Bhanu, specifically coming from the bank side. I mean, this is my observation. Generally, the innovation stops at dais after rewarding someone who has come with a fantastic idea, and it ends there. So the real crux of it is taking it forward somewhere. I think you have touched on that. But if you draw a parallel to organizations like 3M, where industrialization of innovation is more important than innovating itself. So with that, are there any steps that you specifically take within your organization to industrialize them? Do you use some metrics to measure? Do you use tools? I mean, how is it done on your side? That's my question for both of you.
You want to go first, Bhanu?
If you ask me, have we put a structure to measuring it, metrics? We have the proven tools of reporting to see how many innovations made through to production, how many of them stayed in production beyond a year, and how many of them have given place to other innovations. For example, you may innovate a concept, but that itself will be a breeding factor for other people to innovate around. You know, I could take a very classic example of ENBD innovating many years ago, what's known as a MePay. Okay? That's when we started the concept of using your telephone contact and then transferring your money. It's such a simple innovation, right? You take your phone, I want to pay, and then people started innovating it. So it stayed in production. But if you ask me, what was it that we did right with it, if you ask? Whatever I mentioned in my that particular question, where we need to be very careful of MVP. We're very, very conscious. We told the team has to deliver it within. If any innovation delivery takes beyond 3 sprints, it's very unlikely it will hit the production. So that's the boundary line that we define for innovation. And sometimes POC themselves become a product for implementation. You get into a POC and you get dragged into the actual solution. Do I have a tool or any structured tool to measure the metrics? Honest answer is no. It's the usual MS tools that you would come across is what we use, and the data points. That's about it. That's about
3 sprints, and if you haven't delivered, then it is.
Yeah, it's very unlikely, very unlikely, because somewhere it's ping-ponging, yeah? Somewhere it's ping-ponging. Or it is too huge and I have not divided it sufficiently enough to deliver it fast. So that's what we have seen in the last...
Thank you. Just to add on to what she said, I think one of the core success factors of driving innovation is to actually assign it to the right team. Because eventually we are all human beings. And the processes, the theories, you know, if they are adopted and understood by a specific team properly, then definitely the rollout of this innovation and for it to see sunlight is more higher. So I think it's the team that you entrust with. And this team needs to really understand what is innovation all about and why are we innovating? Why have we been gathered as a team to innovate? Is it to please an individual, or is it actually to be serving a greater purpose? And what is the purpose for this innovation? And this is something that motivates individuals. That why am I in this room and what am I doing this for? Is it for me to get a bigger bonus or get a reward from the CEO? Or is it to be appreciated by the customers or by my colleagues or something? So I think that cause, the main cause for innovation is something that is very important. And obviously, to keep the teams motivated, institutions need to remove as much of bureaucracy as possible. So, you should allow them to try and fail. I think Salman spoke about fast failure. It is sort of a ground rule for any team that you give them this task of innovating. Because let them try, let them do it. If they fail, no harm.
Fail fast again. So it's actually about, ultimately, it's having the right people and empowering the right people to do what is appropriate. I think that's practical experience speaking there, Tariq. One last question before we can wrap for our next break. Any questions? I see one hand there, yeah.
Yeah, hi. Good morning, everyone. This is Jinesh from Bank Muscat. My question is to Tariq and Maiya both. In terms of, from your experience, what have been the biggest challenges on execution? I completely agree with what Salman mentioned and what Tariq, Maiya, you've been mentioning. Innovation or idea is the easy part. It's the execution which largely fails. So what have been the biggest reasons why you feel the execution doesn't happen?
Maiya?
See, from our own experience, what we have seen, the ideas don't actually see the light of the day is 3 things. Either they are struggling or are constrained by low trust, high cost, high friction. So if you now want to summarize this in terms of low trust is never been experimented, never been successful, and why should I invest? That is the low trust. The high cost is, I already have, like Bhanu mentioned, some projects are going on. India is already ahead. Let's put 100 people, remove people from other projects. So that is because of the high cost kind of a situation. Third one is the high friction. See, many organizations will experience this because one department is trying an initiative and trying to do some innovation. The other departments had to collaborate with them to provide that kind of necessary, whatever the APIs or integrations, interfaces, people, time, all of that to make it happen as success at the organization level, not individual success. So the challenge in front of the organization, what we have seen is moving away from this low trust, high cost, high friction to high trust, low cost, low friction kind of an environment. So once you clear that path, the innovation becomes a natural journey. And this is exactly what DBS is doing. Okay, his question was, how do you remove this? It basically goes back to what Tariq kept on talking about, the culture. A culture of an organization has to be not at the top, it has to be a bottom up. Every individual has to think about, yes, this is what is going to improve my life, the customer life, and the partner ecosystem life. So either in terms of the value, in terms of the time, in terms of the money, in terms of the effort. So if there is an awareness around that, and acceptance around that, I think automatically this culture will fall in place. As long as you're not able to convince people on that, it's basically value versus values. The people who want to go ahead and do innovations for the sake of innovation, they are going behind value. If you want, the innovation has to be at an enterprise level, an organization level, delivering value to the ecosystem, it is going to be built on the values. How you define the values for an organization drives the value next. It is not the value driving the values.
You couldn't have summarized this panel better than that, Maiya. Yeah. Driving value is all about having the right values. Yeah. So on that note, I would like to draw the curtains on this panel. Unfortunately, I know there's many questions, but we could take it up over the tea break. May I actually take the opportunity to thank the panelists here.